Coming up, the number of the morning. April retail sales due out in just a few minutes, and they're expected. We're going to have the data when Squawk Box returns right after this.
It's expected to be ugly. Make sure America's card room is working. $3.30. Beautiful. There's no way, dude. Does ACB stay over $9? Had an epic run up. Now we need it to stay in this fucking $8 range. We can't have it go above 9. Fuck. Do. Had to turn the meat off. We don't need to have our channel on a fucking loop, that's for sure. You know what I'm saying? Like, we're here, we're chilling.
Welcome back to Squawk Box. Rick Santelli here, live in Chicago with breaking news.
Rick,
our April
what's the
read
breaking news
on retail
from?
sales, expecting a number down around 12%, and it's worse, it's down 16.4%. Of course, this is an all-time low month-over-month change.
Way worse. Oh, tanking.
With regard to its history going back to early 1992.
What's up, all months for
if we look at X autos, it's down 17.2.
What the fuck? Play Rick. What the fuck is going on here? TD Ameritrade wigging out.
Basically close to
Are you okay,
50
buddy?
plus years.
I almost fucking shut you down. Should I?
Thank you, Rick. We're going to... Also, running through the numbers right now. I want to get his take on
DraftKings earning call.
Steve.
I heard their numbers weren't that great.
Yeah, Andrew, you know, the country's shut down and people aren't buying stuff. I mean, I hate to state the obvious, but this is an obvious statement in bold relief here. They're not buying cars, down 12%. They're not buying furnishings and home furnishing items, down 58%.
The stream's lagging too.
And clothing accessories down 78%. I mean, there's one positive here. I think there is just one positive, and that positive is non-store retailers up 8.4%. And besides some sort of strange up and down we had on December 18, that is the largest one-month increase, and that is electronics, and that's where people are indeed buying things. Non-store retailers down 29%. And I want to just say a word here. You have gasoline station sales down 28%. Normally that's a good thing, where the decline in gas prices ends up being sort of like a tax cut for individuals. Except in this case, because people...
Do I have to put all this info in? Like, here you go, company, investor in yo shit, and I spelled it yo shit. Investor in yo shit. Submit. Like, I don't need to give you all this fucking info. Jables, dude! I've been wondering where you've been.
Is available in our current report on Form 8-K filed today with the SEC, and our earnings presentation available on our website at investors.draftkings.com.
Well.
Hosting the call today, we have Jason Robbins, Chief Executive Officer, and Jason Park, Chief Financial Officer at DraftKings. They will provide opening remarks and a review of financials, and then we will open up the call to questions. I will now turn the call over to DraftKings CEO, Jason Robbins.
Thank you, Stanton, and good morning, everyone. Welcome to our first earnings call as a publicly traded company. Before we start, I'd like to thank all the essential workers, from healthcare professionals to grocery store employees, who have been on the front lines fighting this global pandemic. Our thoughts are with everyone who has been impacted by COVID-19. I'd also like to express my appreciation to our shareholders for their support. We are thankful for the belief that our investors have demonstrated in DraftKings through their participation in our business combination. And we also greatly value and welcome those who have become new DraftKings shareholders.
Stop and restart the stream?
The success of our transaction is a testament to the conviction and confidence our owners have in our ability to continue to build the only U.S.-based pure-play sports betting and iGaming company.
Life is good. Just been on that
the DraftKings vision is unchanged.
That's what's up.
Our goal is to build the best, most trusted, and most customer-centric destination for skin-in-the-game fans, offering the most entertaining real-money gaming products that will forever transform the way people experience sports.
I haven't seen oven mitts in a while.
I'd like to cover three main topics today. First, I will provide a brief summary of the business, the large and growing market opportunity, our strong competitive positioning, and our ability to generate differentiated economics. Second, I'll review how we are managing through the current crisis to best position our business as sporting events resume. And I will also provide an update on where things stand on the legislative front. Third, I'll outline our major priorities going forward. With that, let me start with a summary of our business. DraftKings is uniquely positioned at the intersection of digital sports entertainment and gaming in a rapidly growing industry. Differentiated economics in online gaming due to our strong CAC and LTV metrics, driven by our large and growing fantasy sports database, a strong and well-known brand, significant expertise and infrastructure around marketing, and robust cross-sell metrics powered by years of investment in data science and analytics. Additionally, we have a clear state entry playbook to drive long-term profitability. Turning to current events, I want to provide an overview of how we are responding to COVID-19. Certainly, the current environment of major sports leagues and major sporting events has created short-term revenue headwinds for the business.
Should be better now?
However, we are now in a strong position with nearly $500 million of cash on our balance sheet. Additionally, our long-term growth expectations remain unchanged and under certain scenarios may even accelerate. While no one can predict exactly how COVID-19 will affect the world and for how long, we are confident that when sports return, DraftKings will be ready. As we have taken steps to navigate the short-term impacts of the crisis, we have also been planning for what the post-COVID-19 world might look like, ensuring that the actions we are taking today are putting us in the strongest possible position. Our number one priority as a company is our employees' health and safety, and our organization continues to work productively in this work-from-home environment. Our teams are making great progress on our key priorities, such as launching new states, continuously upgrading our data automation and marketing technology capabilities, and building great products for our customers. Our product and technology teams have also created new content that is keeping our customers engaged.
Do you hear me? Check.
I would like
Mic
to thank
check,
all of
1,
our
2.
tremendously talented employees who have stepped up and adapted to new working conditions without missing a beat. It has been truly remarkable to witness. On that note, I am very proud of the content that we have developed over the last 2 months. For example, we have built a product that allows DraftKings customers to engage in esports events such as simulated eNASCAR, Counter-Strike, and Rocket League.
Wow.
We developed
You
content
can
for lesser
bet
known
on
competitive
Rocket
sports
League?
such as table tennis. A plethora of pop culture free-to-play schools contests that covered everything from the Democratic debate to TV shows like Survivor, The Last Dance, and Top. We also launched simulated matches, and most recently we partnered with MLB on their new MLB Dream Draft.
Simulated Madden
In
games
parallel,
they were running.
we've continued to deliver on our state expansion roadmap, successfully launching both iGaming in Pennsylvania and sports betting in Colorado in early May. The engagement numbers that we are seeing across all of these products are a great validation that our customers are loving the content, and it also shows their passion for our products and loyalty to our brand. As we continue to monitor developments from sports leagues and teams, we are proactively planning for the variations of what the sports calendar could look like the rest of the year. With the expectation that the sports calendar will overlap like never before, our focus is on ensuring that we are prepared for the potential increased traffic and activity. There are still a lot of unknowns about how COVID-19 will ultimately impact major sporting events, but we are confident in our ability to perform as we prepare for what we hope will be a busy global sports calendar in the second half of the year. Currently, we do not anticipate any impact to our FY 2021 or long-term plans as a result of COVID-19, assuming the sporting events calendar resumes to a normal state by 2021. There appears to be momentum with sports betting and iGaming legislation in the U.S. We are continuing to work with regulators to get our product live.
How about some poker?
In Q1, we launched
How about
sports
live?
betting in
How about
Iowa.
online
More
poker?
recently, we launched iGaming in Pennsylvania and online sports betting in Colorado. Additionally, an online sports betting bill became law in Virginia on April 22nd. Other states have passed legislation over the past year or so and are in the process of working towards launching operators. These states include Michigan, which passed a sports betting and iGaming law in December 2019, and Tennessee and Illinois, which legalized online sports betting about a year ago. At this time, approximately 14 states are actively considering sports betting legislation. We are hopeful that we will continue to see the momentum as many states are expected to confront budget deficits.
D-King.
Finally, before I turn it over to our CFO, Jason Park, to detail our Q1 performance and results, I wanted to provide an overview of our priorities for the business. As always, we are focused on entering new states at the earliest opportunity. In addition to the recent news in Pennsylvania and Colorado, we are working towards launching online sports betting in other states that have passed laws, such as Illinois, Michigan, Tennessee, and Virginia. We are also in the process of working with regulators in West Virginia to hopefully launch iGaming. We will continue to invest in our product and technology capabilities as we look to stay ahead of the competition and truly differentiate our products in the market. Our ability to create new content quickly during this period was enabled by the technology and product investments we had previously made. These new products have allowed us to continue to acquire and retain users, and we will be monitoring activity on these alternate offerings once traditional sports return. Continued traction and engagement with products centered around esports and pools based on pop culture could positively affect CAC and LTV over time. Lastly, we will continue to work towards migrating to our own proprietary software and investing in live betting and other unique offerings for American sports. Strategically, we believe this will create a key differentiator for DraftKings, helping us win with consumers and partners and also improving our long-term margin profile. With that, I will now turn it over to DraftKings CFO, Jason Park.
Thank you, Jason. As many of you are aware, we completed our business combination with SB Tech and Diamond Eagle on April 23rd. Accordingly, our results for the first quarter ending March 31st reflect those of Legacy DraftKings and Legacy SB Tech, each on a standalone basis. Starting with old DraftKings, despite COVID, we generated $89 million of net revenue in the quarter, which is an increase of 30% versus prior year. Damn. Notably, pre-COVID, prior to March 11th, our revenue was up 60% versus prior year. These results are due to our strategy of launching new states as well as growing revenue in existing states. In this quarter, we were live in 5 new states for online
Marco,
sports betting versus the first
Polo.
quarter of 2019. Indiana,
Sound is still
Iowa,
off. I'm going to reset.
New
I'll be
Hampshire,
back. Really?
Pennsylvania, and West Virginia. Due to COVID, we missed several
still
sizable
fucked
revenue
up.
opportunities attached to Q1 sporting events such as March Madness, as well as several weeks of the NBA and NHL seasons. Nevertheless, we are pleased to have generated 30% revenue growth compared to the prior year. Our iGaming business, such as online blackjack and roulette, was not impacted by COVID-19 and exhibited strong results. Additionally, we saw acceleration in iGaming activity after major sporting events stopped,
Lifesaver, dude.
and people
Efficient
began
is a
looking for alternate forms of
lifesaver,
entertainment.
dude.
Despite COVID-19, we
Out here
experienced
saving
strong
lives,
MUP
dude.
and
We had a
ARPA
good
growth for
game.
the quarter.
I was thinking
We
about it
grew our
last
MUP
night
to
after we got off Sea of Thieves. I was
720,000,
like,
up from
we had a good
619,000
night, dude. We
over
dumpstered 2 kids.
2019.
We had
An
one little
increase of
mess up and hit a
15%.
rock and ruined the
And
next
our ARP MUP
dumpstering.
increased to $41.
But other than that,
$37
2 wins,
last
1
year,
loss.
an increase
That's a
of
good
12%.
night on the sea, I
We are
feel like.
pleased with
That
our
was a good
unique
night
pair
on the
growth
sea.
and with the success we have achieved cross-selling our customers
Retail
into new
sales
products.
down like 18%. Oh my
Adjusted
goodness.
EBITDA for the quarter was negative $49.5 million this year versus negative $20.4 million last year. As we expected, our loss widened primarily due to our planned investment in launching our product offerings in 5 new states. These in the form of promotion and marketing are consistent with our new state plan quickly and scaled back.
Starbucks asked for a break rent for the next year.
In addition to investment into new states, we also invest into our organization.
Starbucks sent a letter to
More than
landlords
half of
demanding
our
a
new
break on rent for the
headcount
next
within
year as
our
the
product and
coronavirus
technology
pandemic
team
hammered
to
U.S.
support our
sales. The
continued
restaurant company,
innovation
the largest country
and
rented
focus on
stores to
diversification
starting
of
June
products.
1st for at least the next
Our
12 months. So new
compensation
changes to lease
expenses are
terms
already beginning
and
to
base
level off
rent.
as we begin reaching scale throughout different parts of the organization. Our net income of negative $68.7 million
In
was
late
in
April
line
that the
with our
company has
net
stayed current on its rent, but he added that the company was
Now
proceeding
turning
lease
to SB Tech.
concessions.
Old SB Tech
Damn,
revenue
shit's going
generated
crazy out
22.6
there.
million euros, an increase of 3% versus Q1 2019.
Commercial real
Notably,
estate's about to
pre-COVID,
fucking
prior to March
tank.
11th, our revenue was up 19%
Isn't it?
versus prior year.
Commercial real estate's tanking.
Adjusted EBITDA was negative 851,000 euros versus prior year of positive 4.3 million euros. Tech is still on track to achieve positive EBITDA for the quarter until COVID hit, and we anticipate a return to profitability. As all of you can appreciate, providing guidance in this environment is difficult, and we are no exception. Given the significant uncertainty around how we will impact this, we are not providing 2020 revenue guidance. We are preparing internally for all possible scenarios, and as we learn more from the league, we will incorporate our learnings into a combination and public listing on April 24th. We are well
History Mitch, audio, video out of sync. How the fuck?